Hello friends, welcome to my channel and thanks for watching this video, and welcome to another series of USA weekly market report. Now if you are looking at the previous Friday's close or last Friday's close, entire market has been knocked out and you see how the market has performed overall, whether you're looking at the US market or the European market. So European market are not showing that much fall, it is just 0.5% down, but if you are looking at the US market, it is close to 0.86 or near to a percent, and VIX has jumped up very sharply. Now, this has happened irrespective of good numbers, and market is looking something else, which is inflation. As I am keep on telling one thing that inflation is going to be on the higher side, but if it is supported by the decent amount of growth, market will have volatility, but it's keep on going higher until and unless the scenario changes. So there is a slight bit of difference. There is a very thin line where the growth can substantially change the dynamics. Okay, that we will see as and when the results start kick in. So once the big companies results started coming or flowing into the market, we will see how things are moving on. Okay, so let's open one of the market outlook and let's see how media is saying. So earnings season kicks into a higher gear, which reports from a diverse group of companies including airline, railroads, and household names like Coke, J&J, Netflix, right? The decline in the 10-year treasury had surprised forecasters this summer, and some strategies say they are watching it in case it is signaling that there could be a trouble ahead. And okay, this is related to the treasury, and this is related to the indices. We are definitely going to discuss about all of that. Then they're talking about the sectors like defensive, healthcare, consumer staples, cyclicals, energy, materials, and these are the company things. Now understand one thing, when the yield is on the higher side, you are saying that okay, we are in a problem. If yields is on the lower side, you will say you are in a problem. So I mean, problems are everywhere. That's the thing. Now let's start. Let's start with the US 10-year treasury this time to see what's actually going on. Now I have been uh, talking about this. Now if you are looking at the chart of US 10-year treasury, it is near to a crucial level indeed, because this level, okay, this is the level that you need to look at, because if US 10-year treasury started falling below 1.25, then it will be a problem. Okay, then the next piece will push the US treasury far lower, much more lower than one can actually think. And because the next support that you will probably see is in between 1 and 0.95, so that's why US 10-year treasury need to hold 1.25. Now if the 10-year yield started falling down, obviously the interest rate will be a big driver, and big companies will definitely enjoy this thing. Okay, so that's the crux of the story. Rest market, let the market decide. Now, so last time also we have talked about the dollar index, and let's see how it's been moving this week. So this is the daily chart of DXY, and although it has not risen, but the thing is it has not fallen much. Okay, so it's also trading or holding uh, at the higher end of the range. So this is the resistance level what we are looking at here. So we have to look for 92.92 or 93 on the upside. If it get crossed, then we will see. Otherwise, the lower end of the range is 89.81, right? Now, coming to the chart of NASDAQ composite, and when everything went down, and this is the high beta index. Now everything is high beta right now. We can't say this is moving slower and that is moving higher. So this is the chart of NASDAQ, and you can clearly see that the volatility creeps in, and the moves will be very sharp on both the sides, so you need to be very prepared for that. And now there is no denial that one or two good news can again change the scenario significantly, okay, because the volatility is higher. uh, we are thinking that something is going to happen and all those things, and once things changed, if one or two results comes good and market started cheering onto the results, then the entire scenario will change. That's also a thing that you need to understand. Now here we are. So this is the range for NASDAQ that you need to look at. Okay, here we are. So now you can see it is inside the trend, and this level which you need to look at will be 14,299 or 14,300 as a support level, and on the downside, if it falls below that, then you have 13,880 as your big support. If it holds, then you will have your first target, first range is in between 15,300 and 15,500, and on the higher side you have 16,500 and 16,800, right? So the trend is intact, and if it holds, if the support holds, the trend also holds. Now the big part of the game is the volatility, and let me tell you, volatility will be on the higher side, because when we are going or when we are making higher highs, the volatility started creeping in time after time. Okay, so there is no denial in the fact, so you must be very watchful in this kind of scenarios. Now the volatility will be sharp on both the sides, on the downside as well as on the upside. So this is another thing that you need to understand, right? Talking about the Dow Jones, I think this is the so the trend is intact. So as you can see, the chart of Dow Jones, it has somehow taking support every time near to the moving averages. But if you are looking at the overall trend, you will see on the downside you have 34,000, and on the upside as a starter you have a range in between 36,200 and 36,600. Okay, so this is in between a range, and this is how it's been moving. And if it falls below 34,000, then we have to change our view. But as I told you that one or two good results, then you will see the scenario will completely change and market will jump like anything. So we can't tell about these kind of things. Now there is one more piece of information. It is about the crude. So crude is not settling down. So this is the crude oil WTI futures, and the thing is, it has slowed down a bit, that's for sure. And the levels, as far as the levels are concerned, what you need to see is this one. Okay, 70.80. Now this is an important support level, or I would say a range. Okay, 70.9, and this one 69.8. So this is the range, this is the important range that you need to look at. And if crude oil falls below 69.8 or 69.7, then you can expect some sort of downside. in the upcoming days and weeks. But for the time being, you have 69 and 70 on the downside and 75 and 77 on the upside. So this is what we can see as far as the current trend is concerned, because this has entered into a consolidation range that's quite visible. Let's see how the price will move, and if there is any settlement, or if there is any agreement between the OPEC countries which has failed last time, then it will be a positive impact for the market but negative impact for the oil, because then you will see the oil price started moving down quite dramatically, right? So overall, volatility is high. You need to be worried about that. But the good thing is volatility will play out on both the sides. So one day it looks like everything going to collapse. The next day you will see the different part of the game, or the higher end of the range. Now this is what you called play the volatility, or buy the dips. Let's see how people's, and if you are not the important thing is, if you are not comfortable with that, don't try to go and try your luck. Okay, do not even think to enter. You can go for long term. If you understand, if you are pro trader, if you know how to deal with this volatility, then it is a completely different thing. But if you don't know how to deal with this situation, stay out or go for long, like for the next 6 months, 1 year or 2 years. There will be no harm in that. The important thing is you need to preserve your capital. So this is the end of the video. If you like this content, do share your thoughts in the comment section and subscribe my channel. Lastly, take care of your family and friends.